Hello, welcome to another episode of another episode of Daily Market Mastery with me, Christian Rauchenwald, on this sunny Friday. I hope you all had a great week so far. It's going to be the last episode for this week. As always, before we jump into it, let's get the usual disclaimer out of the way. Everything that I share in this live stream / video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. Besides that, all the tools that I'm using, so the charting software, the broker, and the strategy I'm following are linked in the video description down below. And the one thing I always recommend is, if you haven't done so, you can use the link down below to read the Elliott Wave Principle online for free or get yourself a physical copy. Now, with all of that out of the way, let's jump into it. And yeah, we have so often a very break-even start into the day with starting slightly red. We're pretty much dumping around the $11,000 mark or 11,000 euro mark in the portfolio for quite some time now. We had one or two nice short trades, but mostly our portfolio is still tied up in GameStop and waiting for it to get called away. And now before we look into the individual charts to try to determine what's going to happen based on the Elliott Wave Principle or Elliott Wave Theory, just gonna have a sip of my Apfelschorle. And yeah. I'm sorry for being late, by the way. I had a couple of calls with freelancers before, and they just took a little bit longer than expected. Yeah, so looking at the charts, the first thing we have open is actually, where do we look first? Let's start here. The first thing we're looking at is Barnes & Noble Educational, where recently we increased our small position of originally less than 17 shares, a little bit, because we nicely bounced off the 61.8 retracement level. We additionally increased our position here then manually by a little bit using our profits from a SPY option play that I made. And time will tell. So far it looks like this might indeed be the end of the corrective pattern. I've talked long and wide about why I think this is going to be the turnaround point and why I placed my order at 845. And I can still be proven wrong and there can still be another push down. But I would only worry if we go below the $8 mark. Then maybe I might have misjudged the correction. But so far, on first glance, it looks like we're good, and which means we should potentially get the next 5 waves from here, which offers us with at least 50% upside on our small position over the next couple of weeks and months. Yeah, so time will tell. So far, I've been right in Barnes & Noble Educational. I also had a few assumptions that were wrong before, so it's not like I'm 100% right. But the prediction that we had from here moving forward actually came quite true. And one could have made a quick, I don't know, what's that, like 5 to 10% profit just trading the bounce from the 61.8% retracement, or potentially more if one holds onto it, which probably brings, or I'm actually going to have to write that down, just so many tasks on my list that I'll have to that I have to look into how again to properly set trailing stop losses in Interactive Brokers TradeStation. So we probably, I know we got some shares earlier based on a misassumption on what we are correcting. So our average in Barnes & Noble Education is obviously a little higher. We can see it's at 1045, but we can also see that we got some shares at 875 manually, and then our order here at 845 that triggered, which means I technically, since we are above that right now, I technically could, at least for the 845 shares, for example, I mean, I know it's not a lot of shares, which also means it doesn't hurt if I get it somehow wrong with setting the stop loss. but I could technically set a trailing stop loss or a regular stop loss to say, okay, we'd close out that trade I have to consider the fees there as well, yeah. But we close out the trade in case I'm wrong and there is another push down. Yeah, so that's about Barnes and Noble Education. Now, GameStop, on the other hand, we have been trailing downwards a little bit, and now we are trailing upwards a little bit again. We're waiting. Technically, we're waiting either for a break to the bottom below the whatever mark we had here, 1931. To confirm, which could make this an ABC pattern. So like we marked here with the expansion and point towards further upside, which then means we would then next wait for a break of the 25.24, or we get a bigger break to the bottom, which would confirm the assumption that the bigger correction hasn't finished yet and we will reach the $15 mark. But again, since we're on a daily chart, it's going to take weeks in the worst case before this plays out and we have our answer, which on one hand doesn't matter much because long term I still think GameStop will have or will go further up. On the other hand, it's frustrating because a huge portion of our portfolio is currently tied up in those positions. And so the streams are not that enticing and fast moving as I would like them to be, and the portfolio is also not developing as fast as I would like it to be. But yeah, that's how it is in GameStop right now. Barnes & Noble, GameStop, then we can look at Grab for a change. So it looks like we have potentially the next 1, 2, 3, 4, and then 5 developing, which might be actually the start of a third wave move. So my January 26 call option, I'm still bullish on that. I think we have a $6 call there. Let's check. No, $5 call. So I think that will still print nicely. Then Immersion, yeah, no news. So again, I mean, right now, daily chart, we're basically waiting now, since it turned out to be wrong, the assumption that we actually finished here around the 61.8 retracement and 100% expansion level, because we broke through that here a couple days ago a little bit. So we're waiting for a confirmation that we're done with the correction here. I think we should eventually be done, in quotes. I don't see much downside anymore before we should get the next impulsive movement upwards. Intel, we are right now actually waiting for another push down. Could be wrong, could be that this is 1, 2, 3, 4, and 5. And the correction is actually, I don't know, A, B, C or so, but I think we have 5 waves down here, 3 waves up here, and we'll get another 5 waves down, and we should be able to potentially enter at the $20 mark, which is the 61.8 retracement and the 100% expansion level. So we're going to have 2 forecasting methods that point towards the same price level. Again, since it's an 8-hour chart, we probably have to wait a couple weeks for that to happen. I wonder if there's an option play we can make. Just a second, gonna check. Now, come on, where is it? Here. There, option strat, optimize, Intel, and our assumption is 2066. And in a perfect world, doesn't always have to be a perfect world, but in a perfect world, we would reach that by October 14th. So if we say November 15th, okay, no play. November 1st, also no great play here. If we make the gamble that it will be symmetrical, although it's really, it's a small gamble, like that would be then October 14th, so we could get October 18th options. We're gonna look a little closer right now, just to, not now. How does that one here subdivide? If that would be A, B, and C. Not perfect, but nice enough. So 1, 2, 3, 4, 5, A, B, C, 1, 2, 3, 4, 5. nice enough actually. So if we zoom out again, then we could be wrong here, but for Intel, if we then would get the October, how it's on October 25. Oh, that might even, so if we say October 18, and we would get the 2250 put, so all strikes. Costs more than it should here. Oh, that's for today. No, not today. October 18th. 2150 put for, yeah, actually cheaper. So let's go with 2 of those, mid price, and there we go. Let's see if we can get them. Yeah, there they're filled.
Order filled.
So the assumption is again that that was now October 18th, and basically the assumption is if it moves perfectly, we should be down here by October 14th is Monday, so actually likely will not happen. So because the weekend in between, so would have to have a red opening on Monday, which would already put the option in a profit. Or if today we have a strong move up, then I already have to see that we're wrong here. But that's why the risk that we have here of now where are they, of $23 is something we can stomach. Whereas I'm actually going to save that right now. So positions, we got 2 of those for that, and can save the trade, save. So if I drag that one over here, you can see that the table looks like this. Again, we're expecting to reach the $20 mark. So, and we can see, not here, but here, that basically if today we have a red day, we might already close the position. I mean, we didn't pay a lot, so it's like $13 premium. So even if we reach 22.70, we could theoretically today already close it for 100% return, yeah, which is then, or more than 100 actually, 150% return. And otherwise, we need to, again, double check. So 2066, and if we are right, we can see that the options would pay out like 10 times, 10 to 15 times if it plays out like this. If it doesn't play out like this, again, we might be able to just close them early for a smaller profit. Or if we're wrong, it's a $23 loss. So something definitely not too bad. Yeah, and since we're already here, we can take a look at our Novavax options. So there, our long call. That currently looks like this. How is the volatility in Novavax? So NVAX, and here we have January 17, so it says 99%. Yeah, pretty much. So like this. So we'll need to reach the $20 or $21 mark at least to get into profit by the end of the runtime. Yeah, so we covered immersion, we covered Barnes & Noble Educational. Intel said, I think we should get another push down here. If it will happen like this, or if it might be dragged out, then the $23 are a wasted gamble. Only time will tell. But I think that's the pattern we're looking at. 1, 2, 3, 4, 5, A, B, C, which would fit with multiple rules and guidelines, because in that case, the corrective wave that we're looking at here would retrace into the area of wave 4 of the previous impulse wave of the lower degree. So that's the previous impulse, and the lower degree is 1, 2, 3, 4, 5. So in the area of wave 4 is this one, where we basically have that. On the other hand, the 100% expansion right now, if this is A, B, for wave C, would point directly on that 61.8 retracement level. And on top of that, it's the 61.8 retracement level. So I think that we have enough signs here that tell us that Intel will go down. In a perfect scenario, wave A and wave C will be almost identical. It doesn't always happen, but it happens often enough that we made the trade based on that. If I'm wrong, we break here higher, then anyway, it's $23 lost. If we start to go down here, we can consider on Monday to, or maybe even today in the evening, to take profit or to buy more options or whatever. So we see that. Yeah. No, we don't get a chart, but we will bother with that once we fall below 20 cents. Costs, yeah, we're still waiting. So far, we stick above the 50% retracement, but we're waiting for a strong sign to confirm that the correction officially really ended here and that we're in the next upward impulsive pattern. NEO, yeah, I think there is a chance that we're done with the correction again. 100%, oh no, 161% expansion level for ABC. 38.2 retracement level, so again multiple aspects, although we did not reach the area of wave 4 yet, so possible, although it could also be 1, 2, 3, 4, 5, then we get ABC, and then we get another 5 waves to get to the 61.8, but for the immediate future I actually expect some upwards movement. Novavax, so we broke lower, did not expect that. We're now below the 78.6 retracement level. Makes it a little tricky because I think we already finished, unless we're correcting this here, so we don't need this then, but we also don't need for now. Maybe we're correcting this here, so 1, 2, 3, 4, 5, and that's now currently in some form 1, 2, 3, 4, 5, no. It's tricky because we have a very clear impulsive pattern upwards, but it's hard to label this as a proper correction. So on the smaller scale, maybe a little bit more downside, but I actually would be surprised because on the bigger scale, we should expect or actually get a decent upside overall. Just hope that it happens before January so that our option actually prints. And yeah, but so far it actually played nicely, not perfectly the way we expected it, but nicely. So we'll just hope the overall pattern holds. And yeah, moving on, SMCI also looks like we are at least getting an ABC move here, so there should be more upside here in the immediate future. Wheeler, since we're looking at it, yeah, so still waiting if that is just somehow a corrective pattern. We would need to go at least higher than 1816 to have a little bit of or higher confidence in that we indeed are looking at the next upwards move. SPY, oh, they were in a 5-minute chart, yeah, so ABC, there we went lower, so that's still part of the correction somehow. I think we finished the correction now, just from the rough look of it. So we're waiting basically to go higher than 577.71, which would confirm that, and which would make this the next wave 1, 2, and 3. So can we get, what's the price for 0-day options right now? Or actually, let's zoom out a little bit. What would we expect if that's the case? If that's the case, we would expect 1, 2, 1, 2, 3, 4, and so we'd expect 577, where we're already close, so that's not happening. Okay, there's not much more upside, so based on 578.30, yeah, probably not worth. SPY 578.30 for today. Yeah, there's nothing that would offer more than 100% payout up till here. Theoretically, we could get a strong move. 580.67 would be the secondary target. There would be some options, but risk reward is too great. And if we aim them for Monday, then there is also no play that has enough upside here. Yeah, so we're gonna stay out of it, but technically this would finish 1, 2, 3, 4, 5 here-ish. So I mean, from the looks of it, 1, 2, 3, 4, 5, so probably here-ish. And then we get a correction. So, but if we aim for next Friday, for example, then there wouldn't be, yeah, the best would be 164% return on the risk, or actually 60%, yeah, oh, what, profit. Okay, so it would pay out 266, yeah. So $100 risk for 166 profit in a setup that requires 4 different options. So, which means chances that some of it gets wrong because you could get assigned on one of the options early are there, so not worth to make the play. But yeah, so I think that here we might still get to see 1, 2, 3, so a little bit of a stronger move, maybe today, maybe Monday, 4, 5, so to end up somewhere between here and here, and then we will be correcting this entire move. Can also double check real quick if we add an extension, sorry, to here. We can see that the minimum target for the 5th wave overlaps with one of the target areas for the 3rd wave. The next one would actually be much higher, so I think it less likely. So I think we're gonna bounce at the 578 here. Yeah, so 1, 2, 3, 4. I mean, it's possible. Maybe we go a little higher, but then there should be the bounce that takes us down further. So no point in entering right now. And oh, we skipped NVIDIA. So circle back there. Okay, we only had a small retracement here, which is quite surprising. I thought we would be already retracing a bigger part, but looks like that was just, maybe we get an extended wave here. I mean, 1, 2, 3, 4. But even here for wave 4, we probably retraced 21.8. 0.4 on the dot, yeah, ABC, which means right now we are looking at a 5th wave that should take us up to potentially 142, but probably options there are expensive. So let's see if we say NVIDIA 142.19 in NVIDIA. And by when is the big question. So yeah, there's also nothing affordable unless we make it very, very short term. Long call, no, too much. Yeah, there's also no play that's like cheap with a decent payout. So we're gonna skip that, and then we move on to the NASDAQ that we're hiding here. That also here made a new high, surprisingly. I also thought that we would have a top here. No, that, I don't know where we have that, so we would have to circle back here. That here is not needed. That was the other way, so. But basically, we're still waiting for the finish of this wave. It could already be done because even here on the 4-hour chart, we see 1, 2, potentially 3, 4, 5. But likely we still go higher, 20,700. So we'll just have to wait and see. And that will then mark that will then mark either ABC and we follow down, or 1, 2, and then that's the next 1, 2 for wave 3 in progress. So, but if we look closer, it would be nice to trade this a little bit more actively again. I mean, not in NVIDIA, but in general. It's not super clear here, to be honest. Yeah, it's So clear are things like here. I mean, obviously in hindsight, everything is clear, yeah, but oh, that actually is the 1, 2. Yeah, 3. 1, 2, 3, 4, 5. Extend fifth wave here. 1, 2, 3, 4, 5. So 3. Sorry. 4 downwards, and now wave 5 has a 1, 2 move. And after that, it's hard to label. So there's still more upside in the Nasdaq, but I'm gonna stay out of it. Lack of available funds right now, and the pattern is not as clear as we would like it to be. Yeah. So, but everyone else in the Nasdaq have fun. And with that, I think we already covered it for today, or not. Like, we went through all the positions. Did we miss something? So we covered Grab, we covered Novavax, we covered Intel, and got some exposure there. We covered GameStop. Faraday futures, not much relevance there right now. So it has been a while since we looked at it, actually. Yeah, so it just keeps doing things. We got that assigned through options. So, I mean, but there is no. So we actually only have $40 exposure in Faraday futures, yeah, and then they made a split or a reverse split. So am I blind? Can I just we don't have 100 shares. That makes this problematic, yeah. So we cannot sell and write an option against that. Do we just, I don't know, do I just close that out? Or, but at the end of the day, the investment is not big enough to make any difference, so we probably just leave it. Immersion we covered, Barnes & Noble we covered, Cause we covered, SunPower doesn't matter, and Greenwave also like is in the same category as Faraday futures, so we just wait and see what happens. And yeah, the exposure is a little bit bigger, but also no point in closing out considering the average price and the current price, so it cannot be much worse. And yeah, I think with that we actually have it. I know it was not the most exciting stream and summary or so on, but SPY, yeah, like nothing to do here right now. So like option plays are not affordable enough. I said there is a little bit more upside left in my opinion before we will get the next correction. We'll keep an eye on it in every stream. Maybe we'll find another nice play like we did earlier this week. Barnes & Noble Educational, yeah, like I think there we are going to see a move upwards, slowly developing 1, 2, 3, 4, 5, and so on, which will bring us some profit there. GameStop is going to be a wait and see game, which I'm fine with. So we just keep writing covered calls at the 30 strike price and using that premium, some of it to buy more shares organically and others to make other trades. And yeah, and the rest would just have to, as said, wait and see. So since I have a lot of other things to do on my to-do list, I'm actually going to call it a day. I hope you were still able to take something away from today's stream. Don't forget, if you don't, or to not miss out any future episodes, like, subscribe, and enable notifications. And if you were able to take something away from this live stream / video and episode, don't forget to hit the thumbs up button. It really helps me a lot. So thanks for stopping by.